Good afternoon, YouTube. So today I'm bringing y'all a video why the stock market's crashing today. We're going to go over my portfolio. It's around $50,000. Just so full transparency what I actually own, because I know I haven't made a video about it recently. So full transparency, we're going to be going over my entire portfolio. And then one stock that I'm really considering buying on the dip, as well with all the other ones that I am buying right now with Trulieve, Planet 13, TTCF, and then Corsair Gaming. So without further ado, why is the stock market crashing? What is, got investors all hyped up? What are they worried about? Why are there so many paper handlers out there? And this is off of the Hungry Bull, Jeremy LaFay, and then Graham Stephan. They created this app. Super awesome platform. That's what I use. So first, we're going to go over the 10-year Treasury yield. Spiked as high as 1.558% today as a threat, basically sooner than expected federal rates, raising the rates. A lot of investors or Wall Street's worried about this. And then the rate will come shortly after yields were as low as 1.29 last week and 1.13% in August. So the 10-year is going up. Everybody's worried about the Fed raising the rates a little bit early. As long as you're a long-term investor, I don't think that this really plays a very big percentage into your portfolio. I mean, steadily buy the dip. That's what I preach, and that's what I do, is buying the dip and being a long-term investor, because over the long term stuff plays out. Over the short term, your stock could go down while the fundamentals are going up, but that's why you want to buy more. That's the whole reason of buying the dip. Whenever the stock gets, the fundamentals go up and the price is going down, you're getting the market cap at a lot cheaper of a valuation. And now there's a potential the government shutdown. So believe it or not, the U.S. government could be out of funds in just the next 3 days. That means Congress will have to compromise a spending plan soon or go into shutdown mode. So as far as the shutdowns, that's not really that big of a deal. We had one, I believe, in 2019. So I am in the military, and it kind of affects us a little bit. We are government employees. It's not really that big of a deal. All of this stuff is getting stressed out so much. And me personally, I believe Wall Street and investors are looking at the stock market at all-time highs, but they're not really going out and looking and finding the deals like I believe the retail investors or a lot of the smaller caps are at phenomenal deals right now. And so with this, I really don't believe that the government shutdown is going to be that big of an issue for us, as long as you're not in too high valuation stocks compared to their growth. So that's one of the things you want to be looking at, along with the balance sheets. That's one thing that I'm going to start preaching a lot, is looking at the balance sheets. How much debt do they have? How much assets and cash equivalents on hand? That's the big thing. For some reason, if the company can't produce any revenue, any gross profits on that, how much cash and cash equivalents do they have to pay their current assets? That's really what I'm going to be looking at. And just so y'all are familiar, current assets is within the next 12 months of payments or debts that they need to make to other companies to keep their business afloat. So we have a quote here: "The full faith and credit of the United States would be impaired, and our country would likely face a financial crisis and economic recession." This is Janet Yellen. She said in a statement to lawmakers. So this is Janet Yellen, and she said in a statement to lawmakers, "I think there would be a financial crisis and a calamity. Absolutely, it's true that the interest payment of the government debt would increase." So there's a little bit of fear around that. I think I think the U.S. government's going to be fine. This is a lot of short-term FUD that's getting priced into the market on a one-day basis. Maybe tomorrow the market will go down again. I don't feel like this is going to be, that 10% correction I know a lot of us investors are looking for. If it is, great. Then we get a lot of our stocks at a lot cheaper of a valuation. And I got money on the side, like I've been preaching in my past videos. That way I can start, buy the dip slowly as it goes down. And as I said, we're going to be going over my portfolio today. So today wasn't the best day in the market. As y'all see, We're down 4.44% or $2,350. I didn't buy the dip today. I'll go ahead and admit that. I think I opened up my Fidelity app at like 2:30 p.m. and just kind of like scrolling around, saw that a lot of the stocks were going down and stuff, but I was just so busy. Most of y'all know that I started a landscaping company. So and that all that cash flow is going into investing and building my business up. So it's kind of like split in half. So do have a lot of cash on the side. If stocks go down, I would save my, individual stocks we'll look at and stuff as they go down. But really, if my portfolio starts hitting about like 48,000 or so, if we get another 4% down day, then I'm going to really start buying the dip. And now just to slowly go more in depth on my portfolio, we have 100 shares and a half a share in Chewy. We'll just go over the full share amounts. That way it's a little bit shortened of a video. Corsair Gaming, we have about 330 shares. Halion, 324 shares. And Palantir, 282 shares. I think that was one of the worst stocks we had today as far as going down. Planet 13, we have 1,500 shares. TTCF or Tattooed Chef, we have 513 shares. And then True Leaf Cannabis, we have 310 shares. So that is my whole entire portfolio on the Fidelity account. And I'm sure the reason why y'all clicked on this video, we're going to do a small breakdown of SoFi. I am looking further into this company, and full transparency, I do use SoFi. This is my debit card right here. Yeah, it's got nothing on the front. That way y'all can't see it. Hack all my information. But yeah, I do use SoFi. So I use SoFi. I have USAA. That's my main, direct deposit account. And then I have my business accounts. And then SoFi is an account. I allot myself $100 every month for buying clothes or like the luxury items. That way I can budget everything out accordingly. So every month I'll put $100 on my SoFi card. And then I'll go out and use that card to, buy pants or shirts or stuff like that. So and I love the platform. I'll probably eventually open up an investing account on there because, their platform's awesome and they have everything in one platform. That's what I really love. I haven't saw another platform that has everything that SoFi has. And, being a fintech stock, a super high growth stock, that's what really has me interested in this company. So now let's look at some of the growth figures that SoFi does have. So 8 consecutive quarters of accelerating year-over-year growth. I mean, it's phenomenal, 113% year-over-year growth. And if you look at these charts, like it's not just, growth, it's accelerating growth. So each growth is getting compounded on the next. So they're growing at extremely fast rates. I have been seeing on TV and stuff that they're advertising more. I see more and more YouTubers and stuff using it or talking about it at least. They're getting MasterCard mentioned, SoFi, and their Galileo, that the company that they bought out. So this company is getting broadcasted out there everywhere, and it's getting in front of more eyes and in front of investors or people looking for different online, fintech banking accounts and stuff like that. And now we have year-over-year growth of products. So they offer everything from lending to credit cards to banking accounts, just everything, investing accounts. They have everything that you need in a finance company. And then we're coming in at about 123% growth rate on that. So full transparency, what I always try to do on my channel. So the market cap is, I think it's around 14 billion today, being that the market has gone down. If you could get this stock this may be, like being a little bit too greedy, but if you could get this stock at a $10 billion valuation, that's when I think this stock would just be a tremendous steal. Like whatever shares that you buy, you better be happy that you bought them shares. So if you could get this at a $10 billion valuation, but me personally, if it starts going into the $12 billion valuation, that's when I'm really starting to look at it. And now we have a price to sales of about 17, which is pretty high, for other fintech companies. But then again, you got to price in, this company is growing at 100% year-over-year rates or above that, 113% and 123% on products. So this company, I mean, 2 years from now, it could be sitting at, if you're buying it now, it could be sitting at a 3 on the price of sales. So that's one thing that you got to keep in mind. You are paying for growth on this company. So this is a little article. I wanted to give y'all the summary on this. SoFi vertically integrated fintech platform. So that's one thing I did want to throw in. I saw a video where the CEO was doing an interview with Goldman Sachs, and he was, they got to a talking point where they were like, do you want to own these companies? Like say Galileo, the merger or the company that they bought out to introduce into SoFi, or do you want to start, advertising on different platforms, getting partnerships? And for the majority of these products, the CEO said that he did want to own, and that's why they're vertically integrated. That way they can make changes on the fly, they can adapt, when markets change or anything like that. Everything is up under their control, which I do love. So now SoFi is growing well due to the online engagement that builds trust with customers that traditionally banks are not able to do. Now, digital engagement provides insight to SoFi and can keep launching products to serving customers' needs, thus driving growth, so steadily growing. Critical fintech platform Galileo drives the flywheel effect of SoFi to accelerate the growth and operating leverage over time. So if you use one product, more than likely, like I said, I'm using the SoFi debit card right now. More than likely, I'm going to start using an investment app. I read articles on SoFi to, further my knowledge and, research more into stocks. And now SoFi provides immediate upside, what some analysts are expecting, of 59.1% when a multiple re-rating happens. And this is one thing that I love about their credit card, because it took me years. I do have the 2% on Citi Double Cashback, so it took me years to build up my credit score to get that. SoFi is offering a 2%, so I could have got this when I was super young, a 2% cashback on all purchases, and you can redeem it into crypto. So any of y'all, crypto bulls out there, y'all can use this credit card, and instead of redeeming the points to pay off, it just makes it a lot easier to buy into your cryptos. And I'm sure you can do that, with all of your investing accounts, so you can redeem that for stocks or whatever, just small things that they're adding that nobody else is doing yet. They're way ahead of everybody else. So I know this was a super small breakdown in SoFi. I'm still doing a lot of research on this. And, if I do buy the stock, I'll come out with a video fully explaining why I'm buying the stock. And if y'all want to, I can go over like projection revenues, what I'm seeing in the next 5 to potentially, I know it gets hard to forecast, but up to, the next decade of where I see this company growing, and basically justifying why I'm buying this stock now. So if y'all did enjoy this video, make sure you hit the subscribe button, and catch me back on the next video.